The Indian stock market just did a backflip and not a baby jump. We are talking about the biggest single day rally in 4 years. Investors are celebrating, traders are high fiving their screens, and even your uncle who bought stocks randomly is feeling like Warren Buffett today. But what just happened? Why did Sensex jump nearly 3000 points and Nifty rise over 900 points in one day? What caused this tsunami of green candles on our charts? Well, sit tight because there's more to this story than just the India-Pakistan ceasefire. Let's decode this. Part 1. The massive jump. Today, both the Sensex and Nifty 50 surged nearly 4%, marking the best trading day in past 4 years. Sensex jumped by 2,995 points, which was around 3.74%. Nifty 50 climbed by 916 points, which is around 3.8%. Now, not just the large caps, even the mid caps and the small caps saw around 3.8% to 4% rally. The market added a whopping 16 lakh crore in investors' wealth in just one day. To put it simply, the stock market threw a party and everyone was invited. Three main reasons for this rally. Reason number 1 is India-Pakistan ceasefire, which is equal to a sentimental boom. Let's address the elephant across the border first. India and Pakistan declared a ceasefire. From the past few weeks, things were heating up. Drone incidents, retaliations, rising tensions, and this uncertainty spooked investors. Many expected a prolonged conflict. So what did smart traders do? They built a short position, expecting the market to crash. But boom! Over the weekend, ceasefire was announced and peace returned. And with this, the investors' anxiety melted. Suddenly, the short sellers had to cover their positions fast, buying up stocks rapidly, leading to a short covering rally in the market. Even defense stocks, which had spiked earlier, corrected slightly because, hey, peace is bad news for the weapon industry, right? Reason number 2. US-China peace talks, which will result in a global green light. Now here's the part missed by most of you people. Everyone's busy with the border drama, but globally something huge happened. The US and China, yes, the two economic Godzillas, are finally taking trade peace. Their officials met in Switzerland, which is obviously a neutral zone, and have reportedly reached some consensus on reducing their trade tariff. Now, why is this such a big deal? Because from last few weeks, it has been a tariff wrestling match going on between Trump and China. Say Trump says 100% tariff, China replies by making it 150%, then Trump shouts 200%, and investors are just silently weeping into their balance sheets. But now this drama seems to be calming down. Global markets are breathing easy, and India, being one of the favorite emerging markets, gets a nice warm hug from all the global investors. Reason number 3 is the FIIs back with a bang. 12,000 crores worth of investment. Foreign investors love one thing, and that is stability. When things get calm, they enter in the market like it's a Diwali sale. Today, foreign institutional investors pumped in nearly 12,000 crore in the Indian equities, especially into the blue chip IT stocks like the Infosys, the TCS, the banking and infra, as well as the mid-cap opportunities. And when FIIs bring in dollars, guess what happens to the Indian rupee? It strengthens. From almost rupees 89 per USD, the rupee is now back under 85 rupees. And the analysts are even eyeing around 82 rupees level soon. So yes, the market jumped, the rupee smiled, and the investors danced. Domestic fundamentals are also smiling, they're looking good. Let's not ignore our own homework. India's domestic indicators are also playing cheerleader. a strong quarter 4 results from IT and the construction sector, record-breaking GST collection, improved IIP numbers, that's your industrial output number, so which means there's an increase in industrial output, the fiscal deficit is narrowing, and basically our report card is looking good and the world is noticing this. So what's next? So in the short term, this is definitely a relief rally for investors and traders. It might continue if the peace and macro factors hold on. In the medium term, we will need to watch how stable things stay, both regionally and globally. And in the long term, obviously it's India remains the darling of emerging markets. Global funds are still betting big on India's growth story, especially with the kind of reforms and the fundamentals that we are showing. We are going to be the next big world leader. So I hope you have liked the video. Do like, share and subscribe to our channel. This motivates us to come up with more such videos. Bye bye. Take care. Jai Hind.